Virtually every real estate transaction needs some financing. Every real estate agent needs good lenders, both to help them with their business, as well as his colleagues, kind of point the way and help us share information what's going on in the marketplace. One of the leaders in Southern California, actually a co-panelist of mine on a accounting firm's real estate update last year, was Daniel Arias. He's with WeFundLA.net, and he was on our show last year. We have him back. Daniel, thank you so much for coming back to us today.
Bill, great to be with you. Thank you for having me.
Great. And this is the official podcast for the LA County Real Estate Investors Association. LAREIC.com is the website. We'll go into the details of that. But Daniel, let's talk about lending. Wild times this last year. Rates went up, busted down below 7. Last week or two back above, now around the 7.1 rate or so. What's going on with interest rates, and how does it affect our real estate industry from your perspective?
Yeah. But by the way, I loved your opening. It's actually 1 out of every 5 real estate transactions in the United States needs a Daniel, because one out of every 5 transactions was cash last year, and so four out of every 5 real estate transactions in the United States needs a Daniel or needs a lender attached to it. But to me, that was a staggering stat, because there's still quite a bit of cash out there. You're seeing a very competitive market, and you're still seeing cash kind of rise to the top. And so, 2023 was a very interesting year for our respective industries, both on the real estate side and on the mortgage side. 2023 was a very challenging year for a lot of people, but as challenging as it was, I am very grateful for 2023 for a couple of reasons, mainly because I think I saw, and Bill, I'd love to hear your opinion on this as well, but I really saw our industry elevate to a new level. 2023 forced most mortgage advisors and real estate agents to either level up or level out of the industry, and it was a real test of grit, of strategy, of staying power, of capital, to be able to weather the storm, and so I'm very grateful that 2023 came, and I do believe that 2023 was the worst of it, and I do believe that 2024 will bring bigger and better volume and more transactions as hopefully interest rates continue in their downward trend. But it was nice to see that the acknowledgement of the Bill Grosses of the world and some of these top producing agents that do good business, that represent their clients at the highest level, that have really mastered their trade, elevate to the top, right? And some of these people that saw a Netflix show and thought that they can sell a $5 million home and cash a big check and drive a fancy car, and that was easy. They've obviously hit a reality check, and so I'm grateful for 2023. Now, 2024, right? We saw some optimism as the year came to a close. We saw the Fed and we saw interest rates in that 10-year Treasury start declining, and we were really encouraged by a drop in rates. We saw rates come off of their 8.5 highs in the fourth quarter of last year. We started seeing rates down into the high 5s and low 6s, which was a really good case study for us to really realize what's going to happen if and when rates come down to these lower levels. And sure enough, the floodgates opened up, Bill. We saw pre-approval activity increase 300% from December. So from December to January, applications for pre-approvals increased 300%. Now, mind you, December was a seasonally slow month. Some of it seasonal, some of it systemic, but still we saw massive increase in pre-approval activity in January because everybody was hearing of these lower interest rates. And so to me, that told me that we're going to be entering a market where the consumer is ready. The demand is out there, and we just need to get to a certain rate level so that the buyers come back in a meaningful way. And I also think that once rates hit a certain level, we might even see some sellers come back in a meaningful way. Obviously, we're starved of inventory. This massive imbalance that's existed in our real estate ecosystem for the last 2 years with not enough supply for the relatively strong demand that's out there, I think will continue unless we see more sellers come to the table and start easing up some of the inventory paralysis, right, that we've seen over the last couple of years.
Yeah, I think because I think I'm old enough to be your father. I'm probably your father's age. I was in the business the generation before you. And, I remember a time when in Southern California, a good chunk of the business was new construction. I want to say maybe a 20%, 30%, in that range, maybe 20%. In every market area, in Orange County, in Inland Empire, in LA County, in Northern LA County, we don't have that here in LA. And so what happens is two things. One, those buyers aren't buying the new inventory. There is none, or virtually none. And second, that used to cause people to move. You'd move out of your old house into a new house. That doesn't happen because the not having the building here in LA. And I think when people talk about sellers coming to the market because of mortgage rates, I think I try to constantly point people to, but it's going to take more homes. And I don't mean just ADUs, I mean more homes being built to really meaningfully change the inventory here in Southern California. In the meantime, we have the houses we have. We're just be shuffling people around those maybe faster, right? And you have such an outflow from California that's created some homes available. If that stopped, if California was successful in making it a better state to live in, and less people moved out, there'd be less inventory, not more. So I think the real thing that you hit on before we kind of the pre-talk here today, that I admire about you or respect about you, I would think be the right word, is you saw, like I did, the market's requiring us as providers of service to offer more, maybe accept less per deal, but more importantly, offer more value to our customers, not by 10, 20%, but by multiples, by orders of magnitude. Yeah. And I've seen you and your team really committed to up-leveling, and I know I have. I've, in my own way, and I try, and I have more to do, and I have more on the plans, but I've seen you guys up-level your marketing. I've seen you up-level how you describe your service to people, your team. Talk a little bit about the differences in your offering to your consumers, and then secondly, to realtors today versus say a year or two ago.
Thank you for asking that question, because I could probably spend an hour answering that, but I'm going to try to give you as condensed and concise and clear answer as possible. But we've all heard that people want to work with other professionals that we know, like, and trust, right? Well, guess what, Bill? It's no longer good enough to be somebody that is known, liked, and trusted. Like, that's just not good enough anymore. You truly have to be a subject matter expert in your field to be able to offer the valuable advice to a borrower or to a client that's going to, one, help them avoid some potentially costly mistakes, and two, really set them up for future long-term success, right? And so unless you're truly following the market and you've really mastered your trade, and you can speak to capital markets, and you can speak to what's going on with inflation, you can speak about the latest job numbers that came out that were stronger than expected, and by the way, also explained it in an easy to digest manner, you are doing a disservice to your client if you're not a subject matter expert. And so, you asked, how has it compared to a year or two ago? So obviously rates and capital and money was essentially free 2 or 3 years ago. And so we were just drinking from a fire hose, right? Just taking call after call, trying to board as many loans and just putting borrower after borrower into the loan system. And now it's so funny, because when a borrower calls today and says, hey, Bill Gross told me to give you a call, I'm looking to buy a home in San Dimas, and I'd love to get pre-approved. That call in 2020 or 2021 maybe was 15 minutes. Maybe on a bad day or a long day, it was 15 minutes. Today, that call is minimum of 1 hour. Minimum of 1 hour, because I am going into depth on what's really going on with our market. I'm going into depth of what's likely to happen. I quote some of the biggest economists and all of the data that supports not what I'm saying, but I also like to quote all the data that supports my theory or my hypothesis on where the market is heading. And because that's where I think someone's going to get the most value out of working with Bill or with Daniel or with a good mortgage advisor or a good real estate agent, is that they can have a lens into the future, truly understand some of the market dynamics that are occurring, and be able to give somebody sound advice. I mean, I've had many conversations with borrowers, and it's like, actually, right now is probably not the best time for you to make a move, right? And that could be for a number of reasons. But more often than not, I have a lot of borrowers who are very afraid. I mean, I actually was talking to a borrower this morning for almost 2 hours because he said, man, Dan, I should have listened to you early last year. I got pre-approved, and man, you were telling me to do it. You're telling me home prices were going to go up, and and I didn't do it. And oh my God, that same house that I was looking at buying just got relisted for $150,000 more, and there's multiple offers on it. I was literally talking to borrower's name is Miles. We won't say his last name, but it was a little bit of a validation, right? That
Right.
Some of the advice that we gave him last year was good, sound advice, based on research, based on really being a subject matter expert in our field. And I think that's really the biggest shift that we've seen. Right now, we're really wanting to take the time to advise our clients, educate them, right? Financial literacy is such an underrated thing here in our society now. And for some industries, it's fine. Some people don't really need to understand the financial markets at a deep level. But I think that as we elevate our financial literacy, we also can now start helping others build long-term financial wealth through real estate. And that's been kind of cool to see, because we've got borrowers coming back to us now saying, hey, I'm glad you told me to buy 3 or 4 years ago. I've got lots of equity. I'm ready to make my next purchase for an investment property. So that's been cool to see clients come back and lean on us for their next purchase.
And it comes back to fundamentals. I think, like everything in every business, there's a time when it's just pure hype and excitement. Everybody's buying as much as they can. The market's different now. Buyers are going to be more deliberate. They're going to have more people trying to talk them out of it. The margin's a little tighter. The prices are higher. The mortgage is a little more expensive. The insurance is a little more expensive. And the more education they have up front, the more they can go through with comfort and confidence, knowing they're making the right decision. If you shortcut the process, they're going to stop halfway through and back out, and that creates a mess for everybody. And I think that's one of the things that's changed. 2 years ago, you can go online to some stupid website and pick the lowest rate, and the idiot there would quote a rate he didn't have, and the rates went down 0.5%, and he made more money by lying to the customer. Now it's the opposite. You're lucky to get the same rate if it doesn't go up. If you tell your customer that, you're in good shape. If you don't, you've got an upset customer, the deal just falls apart. And so I think that this all just gets back to good fundamentals. Now, I also know you guys spend a lot of time on designing and I think relaunching, if I remember correctly, kind of your offering to your real estate partners. Like, you guys really are involved, from, at least that's my perspective, on not just doing mortgages, but really tying into the buyer's agent, tying into what they're doing with the customer. Talk a little bit about, you have more time now, or you have to spend more time now. What does that look like different, say, than 2 years ago?
Yeah, I mean, look, I think our shift a few years ago was from becoming the preferred lender for a real estate agent to becoming a partner of that real estate agent. This has to be a two-way street. We can't just expect to be somebody who's known, liked, and trusted and hope that a residential purchase agreement pops up in our Outlook inbox with a accepted offer. We have to truly be a partner. And what I mean by that is, again, what's the value that I bring to you in your business? What am I doing to help you actively grow your business? And so, we do that in a bunch of different ways, really led with the service and the experience. We're an extension of the real estate partner. And so we understand that we're a representation of that agent, and there comes tremendous responsibility with that referral from that agent. And so I think we've done just a really exceptional job of curating a workflow that's centered around clear communication and clear expectations. It's so crazy that, you have clients that call and they're so afraid to even talk to us. They're afraid to talk to a mortgage advisor because they're just so overwhelmed, and they've heard horror stories of how, crazy of a process it is, and how much documentation you have to provide, and how intrusive it is, and I take great pride in our workflow, and I can share countless experiences and feedback from borrowers after they've closed their transaction, and they were pleasantly surprised at the efficiency and the communication and just how we almost compartmentalized every step of the process into each individual milestone. And so, I think that really is where most agents get the most value out of working with us, is just the speed and efficiency and the service that we provide the end consumer. Now, secondly, I do. I'm going to talk a little bit about product, because that's the one thing I did like about this rising interest rate environment. Right, we saw rates again come off of their 8.5% highs last year, and now dipped into the low sixes, and now we're kind of back up into the high sixes, low sevens. But product innovation, to me, has been the most interesting and exciting part of this whole cycle that we're in the middle of. We've seen a return to the market and to the secondary markets for innovative product to help more borrowers to say yes more often, and that could be the restaurant owner that owns this restaurant here that I'm looking at, the El Portal. If anybody's been to El Portal in Pasadena, that business owner may have great cash flow and good income, but may have creative accounting strategies that a lot of their income and help them enjoy and keep most of their hard-earned money. And so normally, traditionally, a Wells Fargo, a B of A, a Chase is going to tell that person that they can't help them. And so the nice thing is that we've now created an entire product suite dedicated to the self-employed borrower that allows us to say yes more often, allows us to qualify them in a more creative way based off of either cash flow into bank statements. And so, and mind you, people are like, oh, well, what's the rate on that thing? It must be like 2 or 3% higher than the conventional rate. The spreads right now, and the secondary markets for these non-QM loans come in and out, but currently today, you can almost price out a bank statement loan and a prime conventional full doc loan, and they're probably within 0.25% of each other, Bill. It's fascinating. So sometimes the non-QM loans are actually pricing out a little bit better than the conventional, and I'm like, oh my goodness, like this is nuts. So product innovation is exciting. The other big product that we've been pushing, and that's been very, very helpful for many of our real estate agents, is our NAF cash product. NAF stands for New American Funding, which is the mothership behind We Fund LA. And our NAF cash product basically is a solve for two things. One, it solves for bridge loans, right? We have so many borrowers who have done well. They purchased 2, 3, 4, 10 years ago. They've owned a home for a long time, and they're ready to make their next purchase, but they really can't make their next purchase until they free up the equity of their departing residence. And so, traditionally bridge loans are maybe an option, but as we all know, bridge loans are, one, very expensive, and two, super complicated. You got to qualify for both payments, the departing and the future one, and got to cross collateralize property. It's a nightmare, and it usually leads into a dead end. Like, bridge loans are just not a viable option. So our very smart and genius CEOs created a proprietary in-house product where we will actually go buy the client's home, the next home, cash for them. We will actually go buy their next home for them using our cash, close with a nice, tight, clean offer, 10-day close, minimal contingencies, show a nice, healthy bank statement with a few $1 million of cash in it, make a cash offer, and then we will give them up to 6 months to sell their departing residence. And then we will sell the house that we purchased for them back to them with a small 1.6 service fee. And so this is solved for bridge, right? And it's solved for this complicated scenario that many homeowners face today. People want to make their next move, but unfortunately are constrained by the fact that they've got a majority of their equity and assets tied up in this property. The second very powerful way that you can use this NAF cash product, Bill, is you don't need a departing residence. You could just be a buyer that says, I am sick and tired of being beat out by cash. I want to be a cash buyer. So what we will do is we'll fully underwrite you. We'll put you through the NAF cash approval process, which is very, very simple and easy. And we will convert any regular buyer to an all cash buyer. And we will do the same thing for them. Once they've identified a property, we just had an offer go out 2 hours ago for an NAF cash buyer. They identified the property. Real estate agent is writing an offer on behalf of NAF Cash LLC. That's the buyer of record. We're making a 10-day close offer. We showed $2.5 million in a bank statement, and we submitted that offer 2 hours ago. Now, this buyer in particular, strong buyer, like has a good job, has great credit, recently got promoted, so they're expecting, some higher reserves later on, but they only had 5% down. They wanted to buy $1 million home in Altadena, but they only have 5% down. Bill, you know that it's hard to get anybody with a small down payment into escrow, right? Listing agents are a little weary about the smaller down payments. If there's an appraisal,
we're going to call you. We're going to talk about that loan in detail. We're going to go through.
Bill,
you're going to pull out your magnifying glass. I'm going to pull up my dental pick, and we're going to go through step by
it's
step.
fascinating. So we submitted the offer, and we're just waiting to hear back, hopefully, of an offer acceptance. But
Nice.
this NAV cash program brings so much value to agents because you're getting a front of the line pass or a cut to the front of the line pass with this NAV cash program.
I know the parent company real well. I remember back when they were younger, and I remember going to corporate headquarters when Patty and I forget her husband's name,
Rick and Patty,
would walk around like they were just normal people. Nowadays, they're like the king and queen, but they're not. But that's how it feels when you know what they've accomplished. They've done so much of the time. But the thing is, they really came from the street. Your company's really run by a couple of originators, other than so many other. Not your company, the parent company, NAV is unusual in that regard that they still have we're a loan officer kind of feel to it at the executive level, where most of your competitors are really just big corporations that have just faceless. They're just trying to figure out how to make money without helping anybody do anything. And so
we kid around here at the office all of the time that, we work for an incredible company that's run by mom and dad. And it's funny you mentioned that, like they've done incredibly well. Rick and Patty are some of the most dynamic and smart entrepreneurs that I know. And let me tell you something, Bill, they are regular people. Patty and me were texting this morning. They just bought this big building. They just bought this big building in Santa Ana that they got it for a steal of a deal, Class A commercial building, 9-story building where we're moving our headquarters to. And literally, I texted her this morning. She responded, "Oh my God, so exciting!" The regular people, they're still, at the highest level of this organization, but still communicating with all of their team, and they're great people. I'm so proud to be wearing the New American Funding jersey.
If it took them showing up at an office to get a couple loans lined up, they would do it. They're just like old loan officers who grew up and are running this big business. Yeah. So you've been around now. When I first met you, you were kind of the young guy, the new guy on the come up. Now you're like the OG, I'm sure, in your office, or one of them. You've been around a while. You've been in this business for a few years, and yet there's new people coming in. Market's a little tougher today than 5 years ago, 8 years ago. Starting, the people need to start their career. What do you say to somebody who's looking to launch a real estate career in this market as a mortgage originator? It's got to be tough times. Your company's not handing out salary checks. You gotta live off of what you kill. So what are you telling people looking to start in this career right now?
It's an interesting question. And thank you for saying that I'm an OG. I'm 40 years old. I'll be celebrating my 20th year in mortgage this year.
And you look like you're 21 years old. Like if I was a bartender, I'd have to card you for sure.
I'm 40. Maybe it's the filter that I have on my camera, but I'll be 41 in April. I'll be celebrating my 20th year in mortgage this year.
Wow.
And Bill, this has been a life-changing career path for me that I fell into by accident. I don't think anybody, goes to school and says, I want to be a mortgage originator. You typically fall into this industry by accident. But serendipitously for me, it ended up being just a life-changing career path that has allowed me to do some really cool stuff and impact people in a very meaningful way. And I think now, 20 years later, a ton of mistakes along the way, constantly trying to improve and innovate and evolve. Now I can look back and I look at the young guns that I'll call young guns that are sitting here at these offices outside my office that are coming up, are the next generation of mortgage advisors and the next generation of real estate professionals. And what I tell them is that, one, I said it earlier, you have to master your trade. You really have to know your business at a deep level. You have to underwrite a file better than the underwriter. You have to know how to read an appraisal better than the appraiser that put that report together. You need to know every facet of our industry at the highest level, because you need to be able to speak to every facet and aspect of what we do at the highest level. And so that's the number one thing I stress to everybody: master your trade, know your underwriting guidelines, know all of the ins and outs of all of the programs and products that we offer, so that if you hear an agent or you hear a need of a certain little niche thing that maybe we do that others don't, like, you can raise your hand and say, I can do that, and I know it at a high level. So number one, master your trade. Number two, I think that people need to understand that you're going to have to make incredible and extraordinary sacrifices to have a long-term career in real estate and mortgage. You're going to have to be willing to put in the time to really, make mistakes, cut your teeth, and attach yourself to hopefully, a professional or mentor that has gone through the business, has made a lot of the mistakes that you've made, that can now help you avoid those same mistakes that they made. And that's what I tell my guys. Like, I've got guys that are producing at a very high level, and I tell them, well, obviously you've figured out the origination side of our business. Now let me help you avoid some of the costly and embarrassing mistakes that I made in my 20-year career, and hopefully help you avoid some of those things that I did, right? And because some of them are again, they're origination wizards. So, I think making sure that you attach yourself to a good mentor, acknowledging and recognizing that you're going to have to make extraordinary sacrifices, whether it's financially, right? You better have a nice savings account ready to go and to carry you through, what's probably one of the most difficult and challenging times our industry has seen in the last 30 years, at least from a volume perspective, right? The 2023 was the lowest volume we've seen in the last 30 years. So I feel like if you have some money saved up, I tell everybody you need a minimum of 12 months reserves. If you're not getting into this business with 12 months reserves in the bank, then you're going to make decisions based off of either greed or financial decisions that are not necessarily based off of what's best for the borrower and the agent. And so you want to avoid all of those pitfalls and have some reserves so that you can truly focus on doing the right thing and the best thing for the borrower at all times. And yeah, man, I'm very, very, very grateful for accidentally falling into this business, and 20 years later, looking back at the incredible experiences and opportunities that this industry has given me, and now hopefully the good and positive impact we're having on the next generation of mortgage advisors.
That's really well said. I think that, if you want to make more money than the appraiser, you need to know appraisals better than they do. No disrespect. I work harder than most appraisers do. If you want to make more money than the underwriter, you better know underwriting better than they do. No disrespect to the underwriter, but I work harder than they do. And I've been around more than they. I've read more guidelines than they have. When I was a lender and a real estate broker, I have a broker, but I read the contracts more than they do. No disrespect. If I want to make more than them, I better be better, and then be able to delegate that to them, like they're my staff in a sense. So I think that's very, very, very well said. So there's another cohort of people who've been in the business for a while. They made good money the last 5 years, and they just got hit in the face. Like a tidal wave, boom. What the hell was this? Rates went up. I thought everything was easy. I was just refinancing the same people every year, year after year after year. Purchases were easy. I pre-approved them. They went out, they got a house, they got approved, I got paid. And now, man, I keep digging, nothing's happening. And I know you see in that cohort people with bad habits. They never really learned the business. They're really struggling. Maybe they don't work for you. They're just colleagues. You meet them along the way. What's your advice to somebody there who really needs to relaunch their business? Either consider getting out, maybe, if it's too hard, or really relaunching. What do you tell them about having to restructure themselves or relaunch themselves?
Yeah. Sadly, we see many of those professionals, both on the real estate and mortgage side, suffering due to the drop in volume, rising interest rates, and the myriad of other things that punched us in the face, like you said. And I've had many difficult and tough conversations with friends, with people that work on my team that I've known for a long time. And the common theme that I've told all of them is that you have to commit, and you have to truly commit to what it is that you want to do. And if it's staying in this industry, And what does that look like? What is your plan to change things up? Because there is no staying stagnant in this industry. You're either growing or you're dying. Like, what are the things and the action items that you control? We don't control rates. We don't control the market. We don't control home values. We don't control capital markets. We control our daily actions and our mindset. So like, what is your plan? What are your daily revenue generating activities that you're going to commit to at the highest level to give yourself the best chance, not even a guarantee, but just the best chance of staying in this business? And so, the last year or two has really been me trying to mentor my team and colleagues and real estate agents that have come to me for help and advice to just really figure out what they need to change. Because if they don't change anything and they're just taking this wait and see approach, which, Bill, I'm sure you've seen a lot of people take this, let's just take this wait and see approach. I'll be back when the market shifts, I'll be back when rates come down, and it's coming, right?
I'm going to drive Uber for now to pay the bills.
Oh God, doing Instacart and Uber, like it's sad, but that's not a strategy. That's not a winning strategy. And I really love hearing when people come to me and say, well, here are the marketing dollars I'm going to set aside to do this marketing project. Here are my email campaigns that I'm going to do. Here's the NAF cash product that I'm going to promote, and go tell that incredible, compelling story to other agents that might have clients that need NAF. It's like, if I hear somebody who's got a really detailed plan and is capitally invested in their business, then I know they're going to make it. And I help them push through this tough moment in our business. But sadly, the reality is that, there isn't enough business. Everybody says, oh, well, there's enough business to go around. No, there isn't enough business to go around for everybody. And we're seeing that today. And so, we are seeing a cleansing of the market. We're seeing the true professionals that bring the most value to their clients and their agents really rise to the top. I mean, if you just look at it from a volume perspective, what we did last year in 2023 was actually a normal year for us, Bill. Like, we did in 2023 what we did in 2019, essentially. So, take COVID out of the mix, because those were just, as Patty, our CEO, likes to call them, those were gifts from God. 2020, 2021 was a gift from God. And
thank you.
And if you think anything other than that, then you're wrong. Those were just gifts. But take those out of the mix, because those were not normal years. Yeah. And if you look at 2023 and our volume, it actually was commensurate with just a normal, healthy year for us. And so, as great as 2020 and 2021 was for the pocketbook, I like to operate under normal circumstances. I want to work in a normal real estate market. I want to work in a normal cycle. So I welcome this normalcy, or the normalizing of our industry.
No, I'll say COVID was the best thing ever happened in my career. I made a ton of money, extended my career. I think fundamentally changed business and extended life for agents like me who use technology a lot in a way that, and I think wiped out a lot of the competition in a way that made my business better. And I'm not saying it to gloat. I try to encourage people to work hard. I'll tell you a cute story I think you'll appreciate. So I do a podcast on Thursdays, and then there's an event I go to nearby. And when business was really good, I'd reward myself with taking Uber. And it was just about a 10, 15-minute drive, but parking was tough, and it wasn't such a safe area. I had to park on the freeway, and I'm a little older. So I said, if I could Uber there, it's probably, it's a nice thing. It's not just frivolous. It's a little bit of a treat. So one day, I look at the Uber thing one day, and well, gee, the Uber Black, for $3 more, will get me there sooner. Okay, good, I'll do that. So this guy picks me up, and I start chatting with him. And it turns out he also was a real estate agent, the same office I used to work in. Wow, okay. And he said, well, where are you going? So I'm going to a real estate conference. He said, well, I'm going to one tomorrow down by the airport, which I know it means you have to pay for parking. He had to pay for the ticket, and he's going to do it tomorrow. And I said, well, what, you're driving me here. Why don't you just park your car? It's free. I'll introduce you to the guy who's speaking. There'll be 250 people here in this event. It's a great networking event, but it's free, and you're already here. You have to drive, you have to park. Oh, no, I'm going to go to this other event. And as he dropped me off, I said, he's never going to make it. He's just not paying attention to the market. You can't afford to throw away money and time. You could have 2-3 years ago, you could have done anything, you'd find business. But today, you better have a plan and work on it and grind at it and put people, distractions aside when they're supposed to be put aside. And I do think I'm big on taking time off for family. I only work certain hours, but when I work, you're not going to get me off the grind, man. And I think that's the key I see of people who are successful is they have a plan, they work the plan, and that's what gets them the results. So here we are, kind of wrapped up. Let's give a kind of a last suggestion. I know you also work with investors. You know, a lot of the people in our program are looking to invest. They get started as investors. Maybe they bought one property, they're looking to make more of a career of it. Tell me about investing in real estate, and what would you encourage somebody? The market's been volatile. Some made a lot of money. Some are concerned about the rates where they are now. What would you say to people looking to build wealth or add to their wealth through real estate investing?
Yeah, well, going back to product innovation, that's been another cool thing that we've seen. Products that really are tailored to help investors, right? As we, again, all know that most investors, and I've seen people who have, 400 doors, and, I see people who have 4 doors, and all their tax returns look the same. Like they're they've got very creative accounting practices, losses through the kazoo, depreciation all over. So I'm glad to report that there's product out there tailored to not look at people's tax returns. If you are a true real estate investor wanting to dabble in investing, and that's focused more on equity position or debt service coverage of the mortgage that they're taking out. And so the good news is that there's a lot of product innovation to help investors reach a higher level of success in real estate. It's been an interesting last 12 months, I would say. I do anywhere between 2 to 4 flips personally a year. Typically in the 1.5, 2.5 million range in the Northeast LA area. So, speaking as an active real estate investor myself, margins have definitely compressed on the flipping side. You're seeing investors doing projects for slimmer and slimmer margins, and so it's really diluted the value of the people who do what I'll call these higher end, higher finishes flips, which is what we do, right? We kind of go into a different property, and we are forecasting who's likely to buy it, and then we build and design around the end buyer or the likely end buyer, and that's been a very, very successful strategy for us. And so so if you're looking to do flips, I think that's gotten a lot tougher. The days of throwing lipstick on a pig are over. The consumer is demanding higher quality work for a property that has been flipped, and so I do think that there's a lot of potential exposure there on the flipping side, unless you are a bona fide seasoned person that knows how to do those well at a high level. Speaking again from personal experience, we just sold a project of ours last month in Eagle Rock, and let me tell you, it was a little nerve-wracking. We went on market the week before Thanksgiving. Terrible timing, right? Like rates were 8.5. Everybody's checking out for vacation and spending time with family, and here we are listing a 2-bedroom, 2-bath, 1,600 square feet in Eagle Rock for $2 million. And
it better be pretty, man. That better look nice.
Oh, she was a looker. She was sexy, let me tell you. And luckily, by the grace of God, we got multiple offers and actually ended up selling it slightly over asking. And
nice.
And so we got a little bit over what we were hoping to get and sold that property, and we've moved on to another beautiful Spanish that we're doing also in Eagle Rock right now. But again, if you're looking to do short-term flips, I think that market's gotten really compressed, and there is some exposure there. You've got to have a well-executed plan and team in place to be able to do flips at a high level right now. The longer-term stuff, it's interesting too. Like I have some Airbnb stuff that I do. I've got some long-term stuff that I hold, and luckily, all the long-term stuff is performing really, really well. Rents are just out of control, Bill. It's crazy what you can command for rentals right now. I've got shoebox 2-bedroom, 1-bath in the heart of East Los Angeles, renting for very close to $3,000 a month. Shoebox 2 bedrooms. Right?
Rentals are crazy right now.
So it's just nuts to see some of the longer term holds are performing well. I'm seeing some numbers nationally show that rents are softening a little bit, but I haven't really seen that here in our local marketplace. And then, the Airbnb market is fascinating. I've got a couple of, unfortunately, some, real estate partners that have invested in some of these second home communities that have radically changed legislation and have curtailed the amount of Airbnbs that you can do, or where you can do them, or the amount of days you can do them. And people have gotten their ass handed to them. I sadly know of a couple of agents that they could have sold their property for 1.3 million in Palm Springs, and it's down to 900,000, and they can't get rid of it. They've lost $400,000 of equity just because Palm Springs came in and said, all right, this zip code no longer can have any Airbnbs. And so got to be really careful with doing short-term rentals, and again, really understand your local community ordinances and laws. And so, but there are areas where it's still a very thriving business. I know a lot of people who have basically built an entire business model off of doing Airbnbs. They're either buying the properties and Airbnb them, or they're doing the arbitrage where they're leasing them from the owner and doing the actual Airbnb themselves and the short-term rental themselves. So
I've seen that. That's a fascinating business for new people, especially. You just go out and get the contract and find the person who arbitrages for you. What a great way to start yourself in that business. You have to own the property.
Yeah, absolutely. So it's definitely a very dynamic part of, obviously, real estate. But I would say, where you could potentially see the greatest rewards, right? But you got to be willing to take a little bit of risk. In some cases, you're taking a lot of risk. But if it's calculated risk and it's well thought out, and there's intention and strategy behind what you're doing, again, most of the world's millionaires and billionaires are real estate investors, and so I think we're all trying to figure out our place in that line. So,
well, Daniel, I guess in addition to funding LA, you also invest in LA. Maybe we should get you back and talk about your investment strategies and in history separately. But really, I do appreciate what you guys do as a team as far as working as a lender, helping real estate agents, helping buyers buy property. Thanks for taking time to share with us today. Daniel Arias, again, he's with We Fund LA. WeFundLA.net is the place to find him. And thanks so much. Really appreciate your time today. As always.
Appreciate you. Thank you.
And for the rest of you, this was the LA County Real Estate Investors Association. We do this we broadcast it Tuesdays at 3 p.m. I would present, if I found the right button, there we go. There's the right button. And you can find the details on our organization at LAREIC.com. It's the LA County Real Estate Investors Association. And we have an event second Thursday every month in the Palms area, kind of north of Culver City, south of Century City. Get about 250 people there for a presentation. March 14th is going to be Jeremy Rubin. We have a great speaker every month. He happens to be a fix and flipper. We've had all types of people with all kinds of presentations. There's a vendors expo before where there's about 50 vendors like me who are there to help you build your business, help you build your investment business and your career. And there's a boot camp as well. You can look at the details. Again, the website, LAREIC.com. Love to have you present there. I'm Bill Gross. Thank you so much. You can find me at Bill Gross Probate on the internet. And as always, make today your best day ever. Thank you so much. Thanks again, Daniel.
Thanks.